Hi all. Today we will touch on one of the most important and relevant topics in the life of each of us: how to survive the financial crisis. Some of you may have experienced this problem before: lost your job, experienced a drop in income, or found yourself in debt trouble. So, how to deal with this and get out of a difficult situation with minimal losses? In this video, we will analyze the main tactics and strategies, highlight the key aspects, and give recommendations on how to manage your finances in times of crisis. Let's dive into this topic right after a short commercial break. Tired of thinking about finances and how to increase your funds? There is a way out. Bybit, the best platform for investment and earnings. With the help of Bybit, you can forget about finances in a month or even a week and get closer to financial freedom. And thanks to the promo code for $1,000, you can start investing without investments. Link in the description. Chapter 1: Regaining Control. 1. Know that negative emotions are completely normal. Before you begin to correct your financial situation, it is important to deal with your emotions. You have to come to terms with the fact that emotional issues are a natural part of the process. Depending on the situation, you may experience stress, depression, or anxiety, which may be accompanied by feelings of guilt or complete failure. You may also feel that you are no longer in control of your life. All these emotions are a natural part of the financial crisis. At first, it will probably be difficult, but gradually all these feelings will fade away if you adapt to the situation and begin to control what is happening again with active actions. 2. Accept your financial situation. In difficult situations, people often try to ignore or deny the problem. This eases the emotional state, but does not help in the long run. It is important to accept your situation in order to be able to work with your problems and solve them yourself. Accepting the situation is the first step towards resolving it. Try to direct all your energy towards positive actions and concrete solutions. Instead of continuing to think about the problem or blaming yourself for what happened, promise yourself to solve the problem at all costs. 3. Talk about your situation. Tell friends or close relatives about the problem to help you feel better, and talk out loud about possible solutions to the problem. Your interlocutors will be able to give you advice based on their personal experience or the experience of their friends. These people will not only provide you with emotional support, but also suggest other, more productive ways to solve the problem. If you can't manage your emotions on your own, see a psychologist or therapist. If you are feeling depressed, anxious, or thinking about hurting yourself because of the financial crisis, you should definitely seek professional help. Chapter 2: Assessment of the current financial situation. Find out what assets you have. The first step to normalizing the financial situation is to analyze your finances. First, evaluate your assets. Assets are everything you own. Assets are the basis of financial stability. They include all valuables in the house, money in accounts, the value of a car, and all money in retirement and investment accounts. Assets can also include other valuable items, jewelry, collectibles. Take these things to an appraiser or try to estimate their value yourself using the internet. So, if you decide to sell them, you will know how much you can expect. Make a list of all assets, writing down their name and value in a column. Calculate the total cost and write it down below. You will also find it helpful to read the article on how to list your assets. 2. Make a list of your obligations. This is about all the money you owe. This is the opposite of assets. Liabilities include credit card debt, consumer and mortgage loans, unpaid bills, student loans, and all other debts. On the same sheet on which you made the list of assets, make a list of liabilities and enter the corresponding amounts. At the very bottom, calculate the total amount of debts. 3. Calculate net worth. Net worth is assets minus liabilities. The resulting number will show how much money will be left if you sell all your assets and pay off all liabilities. This number will accurately describe your current financial situation. Knowing your net worth will help you figure out what options you have. For example, you may need to sell other assets to pay off your debts, if you have any. You may have to use your savings to meet obligations. Most often, the sale of non-essential assets allows you to cover the most important debts. For example, if you sell your car to pay off a loan, your credit score will improve. As a result, your loan payments will decrease every month, and your creditors will not remind you of your debt. Even when filing bankruptcy, creditors in the court may require the sale of certain non-essential assets, so it is better to sell them immediately. Chapter 3: Recovery Plan. 3. Make a plan that suits your needs. Your recovery plan will need to address the issue that brought you to your current situation. In other words, you will need to reduce your debt, if you have any, and increase your income to make up for lost assets and financial stability. You may need to change jobs, get a second job, cut expenses, apply for government assistance, or get debt relief. For example, if your financial crisis is caused by a divorce, you will need to find a source of income, which would compensate for your joint income in marriage. The easiest way to get out of debt and start living off your income is to cut your expenses and increase your income. Other options, such as bankruptcy, may be necessary in certain cases, but they are fraught with difficulties and damage credit history. 2. Calculate your fixed and variable expenses per month. Fixed expenses are expenses that do not change from month to month. Variable expenses are optional expenses that can vary. It's important to know the difference between the two, as it's much easier to cut optional expenses than mandatory expenses. Fixed expenses include bills and all other expenses that you need to cover to meet your basic needs. Fixed expenses also include rent, mortgage payments, utilities, education, insurance, food, and transportation. Fixed costs also include loan payments and other liabilities. Variable expenses include expenses for anything that is not essential, such as cafe meals, gym memberships, entertainment, clothing. 3. Reduce variable costs. Start with variable expenses. These include everything you want, not everything you need. If you refuse unnecessary expenses, you can find money to pay off debts. Don't confuse wants with needs. For example, a phone may be a need, but the latest iPhone is a wish. Make a promise to yourself not to go to a cafe until your situation changes, for example, until you get a job. This will save you a lot of money on food. Control small purchases as well, such as your daily coffee, as these expenses add up. If you refuse them, you can save significant amounts every month. Chapter 4: How to strictly follow the plan and pay off debts. 1. Start putting the plan into action. Once your recovery plan is ready, be it a new job, debt reduction, bankruptcy, or a combination of these steps, get started as soon as possible. The longer you save, the higher your debt will be. Act fast. Many of your decisions can dramatically change your life. As stated at the beginning, it is important to keep a positive attitude and try to see the light at the end of the tunnel. 2. Arrange the debts in order of priority. Remember that in a financial crisis, debt can have different weights. If you have a small amount of money left to pay off your debts after cutting spending, it is important to spend it on your highest priority debts. First, make a payment on loans with collateral in the form of property. These loans include mortgages and car loans. Failure to repay these loans may result in the termination of contracts and the return of property to the lender. Then make payments on unsecured loans, especially those with high interest rates, such as credit cards. At the very end, pay off your loans with a small amount of debt. If you are unable to make payment on an obligation, call the lender and explain the situation. You may be able to change the terms of the loan repayment. 3. Remember the importance of keeping in touch with creditors. While you may be tempted to avoid creditors, this will only make matters worse. It is not uncommon for creditors to sue and start taking part of your salary without your consent, just because they were unable to contact you. Know that creditors will not stop trying to contact you and will not forget about you. Therefore, it is important to act and work with them, not against them. Chapter 5: How to regain financial stability. 1. Do everything in your plan. As you pay off your debts and increase your income, you will gradually begin to feel more financially secure. However, this feeling can quickly pass if you discard your plan and start spending the money saved as before. Until you pay off all your debts, keep saving and do not take out new loans, even if you feel safe. Try to afford one extra thing with the full payment of the next debt. Let's say you had to cancel your Netflix subscription. Promise yourself to pay back your subscription when you pay off your credit card debt. These indulgences will keep you motivated. 2. Repair your credit history. If you have been in arrears or heavily owed, or have filed for bankruptcy, chances are your credit history looks bad. To ensure financial security, you should correct your credit history. This will allow you to receive profitable loans in the future. Although unpaid debts and bankruptcy may be in your history for many years, it is in your power to start correcting the situation as soon as you get back on your feet. Make your credit card payments on time and in full. It will be easier for you to do this when you reduce non-essential expenses. You can also improve your credit history by paying off all other loans on time and in full. This also applies to mortgages and car loans. Do not take out new loans until you have paid off your existing debts. 3. Draw your own conclusions. Analyze what actions and situations led you to the financial crisis from which you barely got out. Have you lived beyond your means, financing your purchases with expensive loans? Perhaps now you know that you can spend less than you used to, especially on optional purchases. Consider this experience to increase your level of knowledge in the field of finance. Chapter 6: Summing up. In concluding our discussion on how to survive a personal financial crisis, I want to remind you that every crisis is not only a test, but also an opportunity. This is a chance to rethink your financial habits, learn how to manage money, and perhaps ignite your entrepreneurial spark. The steps we talked about today will not only help you get through the current crisis, but also strengthen your financial immunity for the future. Remember that there are always ways to solve a problem, and the key to this is your willingness to act and self-confidence. Thank you for watching this video. If you have any tips and ideas on how to deal with the financial crisis, please share them in the comments. Do not forget to subscribe to the channel and leave a like if the video was useful to you. Take care of yourself and your finances. See you soon.